Hello traders and welcome to another video review. Today is Wednesday, January 15, 2025 still. So let's take a look at the economic calendar. Let's see what do we have in the menu for today. Asian session, not very let's say busy, so let's disregard this one. But we start with the CPI data from the UK to 2.5% CPI, worse than expected 2.6%, which is not that bad because it's only 0.1%, and the same situation is the quarterly measure 0.3%. PPI input 0.1, so again a little bit of the less than expected PPI and the CPI increase than it was 1 month ago in the UK. And we will stay with this CPI data through all of the London session. As you can see, we got the CPI from Sweden, from France, Spain, and so on. There's supposed to be some CPI from the Eurozone. I guess it's for tomorrow. Nevertheless, ECB the Guidos will give a speech today at 9 o'clock. At 10 o'clock we got CPI from Poland. Then at 10 o'clock we got IEA monthly report, and at 11 o'clock industrial production. And this is where the data from the Eurozone, from the London session, basically based on the Eurozone, will terminate. Eventually we still have the US session, and then again CPI data, core CPI and CPI from the US is scheduled for release at 2:30, and the situation is the same. Market participants expect the CPI to stay at the same level of 0.3%. Now later on we got the New York Empire State Manufacturing Index, and then we got the data from Canada, manufacturing sales and wholesale sales. At 4 o'clock we got the speech from the FOMC member Kashkari, and then 30 minutes later we got crude oil inventories and Cushing crude oil inventories, CPI from Russia at 5 o'clock, and then at the end of the day, as usual at 8 p.m. beige book from the Fed will be released, and of course the Fed is the bank, Federal Reserve Bank from the USA. And this is where we stop. This is where we stop doing the data release for Wednesday, but we don't stop with our technical part. Let's switch straight on to the euro-dollar. So, well, euro-dollar, you going up. Let me take a look a little bit closer from this situation. First off, let me just take my arrow, some kind of arrow, please. Thank you. There you go. This is the swing low. This is the lower low, right? So that's nothing special. But if we take a look at the momentum, we can see low, and then you can see higher low. Moreover, if you look here, you can see on the 4-hour chart again lower low, higher low, and higher low again here. And that's the same situation on the euro dollar. There is some kind of a low, there is a lower low, and even lower low, which means that we have the bullish divergence between the momentum and the market behavior. Market behavior means making new lower lows. Very nice potential setup scenario for eventual movement to the upside, and we have this bounce from the extremely over. So the market conditions back above the level of 50. Now 58 points is the RSI, and we are narrowing this range towards the level of 1.0333, 1.0347. So this is the next technical resistance. It's not the major one. It's not the major one because the major one still stays at the supply zone located between 1.0440, 1.0461, and only if we break above this supply zone, the outlook will turn out more bullish than it is right now. However, first 100 periods moving average needs to be violated, and then technical resistance just below the moving average must be violated as well. The movement to the upside looks pretty impulsive, looks quite good apparently. However, it doesn't actually mean we are going to rally like there is no tomorrow, because from this low to this high there is 1.90, right? So if there's a 1.90 correction, let me just take a look at this one. Maybe is it no 1.11, so it's a lower correction. Now from this high, there you go, it's not even 1.90. So yes, we need definitely a breakout above this technical resistance, and then it's still not enough for the overbalance, obviously. But if we zoom out, you can take a look. It starts to look like a kind of some sort of the ending diagonal, right? Something here, or you can call it a rising wedge, for example, if you follow this kind of a trading pattern or a price pattern, sorry, and trading setup. Now this is what you're supposed to be looking at right now on the euro dollar. Looks like the euro dollar is being bought back up, so euro is being bought, dollar is being sold across the board. Is it true? Let's take a look at the British pound to the US dollar, so cable. Again, the same situation, but there is no bullish divergence. Okay, this is everything is okay here, but we still have some kind of movement to the upside. 48 points. We almost hit the neutral level of 50. Now we are going higher towards the 1.2231. This is the level where we can of course test and break. If we break it, then the next target is 1.23. Basically that would be a very nice breakout if the bulls want to get above the level of 50. That would help, definitely help to do this. However, please notice the fact that we have been capped twice already at this level here, 1.2237, so it might be not that obvious anymore. So the British pound still going up, but for how long? US dollar, Japanese yen, and then we got some kind of a very interesting behavior, because it looks like the market wants to go lower. 158.89 was the swing high. Kind of a bearish sandwich was made here at the top of this move. Let me zoom in. There you go. You see this kind of a bearish sandwich-ish candlestick pattern, let's say. And now we are going lower. The first leg to the downside is done, 156.93. Then there is a bounce back up. Now the market is trying to test the technical support, 156.25, 155.97 in 3 waves so far. So it is a corrective price action for now. We are below the 100 periods moving average, but it doesn't mean anything because we're still inside of this tight range. There is no breakout lower, there is no breakout higher for now. So as long as we stay inside of this range, the market, as you can see, can go just up and down, and not doing anything in particular, unless there is a trigger for bigger movement to the upside or to the downside. So far, the upside is being preferred because in the back we got very nice uptrend here on the US dollar to the Japanese yen. Let's take a look at the US dollar index, because if euro dollar is going up, what is doing the US dollar index is going down. So we got the first confirmation that the US dollar is being sold across the board. That was the local technical support. It was violated without any problem, 109.44. Let me just switch it to the other level. 110.15 is the technical resistance, a swing high, local swing high, and local technical resistance as well. So how low can we go? Well, there is some let me just make it daily, because we got this measure here. Minus 2.45 was the biggest correction during this up move. So if we want to wait for the overbalance, the price needs to go more than 2.45. to the downside, right? What is so interesting here? Let me just zoom in a little bit because I can't just grab my chart. There you go. What is so interesting is that candle here is the well, it's almost a gravestone doji. Now it's look like the shooting star. It's definitely a pin bar. There is confirmation, and today we might have extension, and this extension might hit even 108.51 technical support, but it's still not enough. We need to move minus 2.45% at least in order to have a technical over balance. Okay, so for now, please just watch this chart and stay vigilant, because the US dollar is being sold across the board. Let's take a look at the gold market on the daily time frame chart. Not much is going on. Let's switch to the 4-hour chart. We can see some sort of the upward movement. We got series of the higher lows, we got series of the higher highs. Fine, but it doesn't actually mean that this is the uptrend, because it still looks kind of a corrective in nature. All right, so this looks more like impulsive movement to the downside. As you can see, we hit the extremely oversold condition during this down move, and the level of 2697 is the level that is responsible for being overpriced, right? Overbought, basically, on the 4-hour chart. So it means that those two, 2725 and 2697, yeah, will act as the technical resistance now. We got support, of course. We got support here. Support to the pip is roughly around this level here, and to the close it's roughly around 2658. Quite interesting technical support, tested few times at least. Nevertheless, it's very important for the bears to break below this technical support, test the 100 periods moving average, and then move lower if they want to this market to test the lows from the 19 December 2024. Otherwise, this technical support, it looks like it's been tested already, and now the market is ready to move higher, especially if the RSI is at the level of almost 60 points. Right, so if this level is violated, we go for the highs from the December 12th 2024 at 2725. However, again, this movement to the upside doesn't actually looks very impulsive just yet. So the 2725 might be the last swing made here during this cycle. Bitcoin made a reversal. From the $89,000 dollars. Just recently we hit 97,687. We consolidate the recent gains above the 100 periods moving average on the 4-hour chart, but on the daily chart we can still gain some ground, because momentum is at the 52 points, so it's positive but it's not strong, and there is still room to the upside here to test 2,698. That's the major level for the Bitcoin right now, and there is room to the upside on the RSI. So with this candlestick in the background, that is showing us buying interest here, just below the big demand zone, there is a pretty nice chance that we will sooner or later break above the $100,000 dollars level and then hit to the January 7th high to test it. The question is whether this level will be violated, or maybe some kind of a sell-off will be initiated again. So for now, we don't know it yet. Yesterday, nice green candle. Today's candle looks green, but the day hasn't been finished yet, so we need to wait for this candle to close. More green candles here means that the bulls are getting stronger and getting ready to test this swing high, and maybe even the all-time high. It doesn't actually look bad. Last line on this chart will be, of course, the trend line right now. Let me just change it to the orange one, and it looks like this. So breakout above the trend line is needed to test the swing high from the January 7th. Otherwise, reversal is expected, and then again deeper penetration of this demand zone. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.